Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti. On behalf of OTC Markets, as well as our co-host, Murdoch Capital Partners and TAA Advisory, we're very pleased you joined us for our next presentation from Australian Vanadium. And before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. And if you're interested in scheduling a meeting with Australian Vanadium, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Vincent Algar. He's the Managing Director of Australian Vanadium Limited, which trades on the OTCQB venture market under the symbol ATVVF, and on the ASX under the symbol AVL. Welcome, Vincent.
Thanks for the introduction, John. It's really good to be here with the OTC market audience. It's our first opportunity to reach out to the OTC audience after having acquired our new status with OTC markets. I'm going to tell you a little bit about our company today. We're a listed Australian company. And for those who it's their first time in meeting an Australian company, there are many listed Australian companies that are focused on mineral discovery and mineral resource development. In particular, and a very hot topic in the world right now is the development of resources here in Australia that relate to critical minerals. In particular, those critical minerals that are involved in the energy transition and ones that are involved in maintaining our way of life. As a civilized way of life. And then this is where we come to our company's name, which is Australian Vanadium Limited. Just a quick list of cautionary statements which are available when you replay this announcement, which basically deal with forward-looking statements that I may make through the course of this and their ASX compliance listing. So we talk about our company being listed. I've just put the US dollar value of our company there. We have been listed for over 11 years, and our company has been trading on the Australian Stock Exchange continuously in that time. We have over 16,000 shareholders. The company trades extremely well with a daily traded volume of over 25 million shares, being one of the most well-traded junior vanadium stocks in the world. Our register is very open, with only around 15% of the top stock in the top 10 or 15% being held. While this may look like a lot of shares on issue for a company, this is quite commonplace for companies that have been around a while. It has both the benefit of having liquidity, which is really attractive for investors to get in and out of the stock, but also to stay in the stock when the thematic is moving strongly. We are well cashed up with over 27 million Australian dollars in the bank, thanks to a capital raising and an option, a warrant expiry at the end of last year, which brought in a little bit of money. This allows us to get on with the work required to develop our project and to finalise our development work to get into production. So just in summary, and I'll come back to this a little bit later, we are a vanadium company. It stands in the name. We are have an Australian project, and we're listed. So those three words, Australian Vanadium Limited, give you everything you need to know about us. And our symbol on the ASX, AVL, backs that up. We are in possession of one of the highest grade vanadium deposits undeveloped in the world, certainly in Australia. We've developed and finished a bankable feasibility study with a 25-year mine life confirmed, and we're working towards and we have cash available to finish our project. We're working towards development of the project. We have completed and started to engage with from our engineering perspective, with engineering contractors who are currently working on final engineering level design. So we can, once financing is secured, we can commence with the construction. The project is a critical mineral project. So in the US, in Australia, in North America, Japan, Korea, vanadium is regarded as a critical mineral. This is for two reasons, and I'll outline these a bit later. But the fact that it's a critical mineral is becoming very, very important to Australian governments and global governments around the world, particularly those countries that do not have vanadium in their resource toolbox, such as the US and Australia. Our focus really over the next coming months is the securing of offtake agreements for our vanadium products and for finalising our export finance debt equation, which is around 50% of our total capital cost we anticipate we can carry. One of the really interesting and exciting parts of our work is the development of downstream options. That includes the development of vanadium redox flow batteries and vanadium electrolyte, which will serve these long-duration energy storage devices, which we believe will be a key part of the energy transition. Just a little look at vanadium. I think the word, it's element number 23 on the periodic table. Vanadium has been produced in the United States many, many years ago as a co-product of uranium development, but it requires the economics of uranium mining to even be a co-product. So over the years, vanadium has been sourced from other territories, in particular from South Africa, and the world's biggest producer of vanadium is China. They produce and distribute internally most of the vanadium, 60% of the world's vanadium, and a lot of the other vanadium in the world comes from, as I said, South Africa and Russia. So we have some very interesting geopolitics at play when it comes to the supply of this critical mineral. 92% of the world's vanadium is used in the making of steel, of various steels. These are tool steels, ship steels, rail steels, and in particular, its primary use in China and around the world is in rebar steels, as in bar steel that goes into construction. It's worth noting as well that 6% of the world's vanadium reports to what we call critical applications, defense applications, chemical applications. The defense applications as jet engine turbine blades, landing gear, nose cones of rockets, nose cones of planes. Some key wearing parts where vanadium adds a lot of strength and limits the requirement for more steel to be used. So its true nature of criticality is in the central box on the slide here. And then, of course, the emerging applications for vanadium. It has a huge place, we believe, in the energy transition, playing a critical role in a battery called the vanadium redox flow battery, which is a long-duration storage device capable of storing and offsetting renewable energy over a very long period of time. And when I say long periods, I'm talking about moving hundreds of megawatts to gigawatt hours of energy over an entire day, 2 days, or 3 days. So significant periods of time where this energy can be used. And we're seeing a significant uptake of vanadium redox flow batteries in California, for example, where the energy pricing signals and market signals have moved on from 1 or 2 hour battery systems to 4 or 5, 8 and 12 hour systems. And vanadium redox flow battery starts to be economically extremely viable alternative in those markets. We look forward to the growth of US markets in particular for long duration storage as a leader in the uptake of renewable energy. So just as I mentioned earlier, global vanadium is dominated by China and Russia. China produces 60% of the world's vanadium, consumes a similar amount, and Russia produces around 15%. South Africa produces another 15%, with Brazil around 10%. So interesting that I just noticed that we've got BRIC countries producing almost all the world's vanadium and no vanadium being produced from primary production anywhere else in the world. The US and Europe do have secondary vanadium production. AVL has a very close relationship with Arkansas-based US vanadium. And there are other companies, AMG in particular, and in Europe and in North America that process secondary vanadium mainly from catalyst from spent catalysts in the hydrocarbon process. So what we're seeing then in the market demand is where we fit in. The global market for vanadium is relatively small. In metric tons of vanadium metal, this reports to currently around just 118,000 tons, of vanadium metal. Most of that, I said, 60% coming out of China and being consumed there. And then we see on that black line, that's the current production. And we see the blue line, which is the slightly increasing 3 to 4% growth rate of new steel consumption around the world. The red line on the bottom on the right, you can see, is AVL's planned production. So we're not really going to dent the market when we come in, but we do play a significant role of 4 or 5% of production. The red represents the real upside for the vanadium market, with the uptake of renewable energy storage and the use of vanadium redox flow batteries, which consume a very large amount of units of vanadium. Now, that vanadium is consumed in one sense, in that it gets used in the battery, but it has a very long life in that battery. Unlike lithium-ion batteries, it doesn't get consumed and then have to go and be recycled. It actually stays in the battery, and it reports to a very circular economy, in that it just gets used to store electrons and distribute them, and we can actually recover that vanadium at the end of life. But it still is able to store and add to the vanadium market. So this is a very exciting part of vanadium growth, is that AVL's new production will simply not necessarily damage the market it's coming into. If anything, it'll be probably insufficient to meet the market needs. And that's where the growth of our project becomes really important. We have quite a North American-centric team right now with Daniel Harris, who's also a director of US Vanadium, on my board, world expert and global industry professional that's been working in vanadium for most of his career, based out of Arkansas in Hot Springs, and running the US vanadium plant there. Todd Richardson, my COO, is based here in Perth with me in Western Australia. He's a native of Arkansas and spent time around the US and here in Australia working on vanadium projects. Graham is a Canadian working here in Australia for the last 20 years and is a process engineer. Recently joined our team in the CEO role. And my chairman, Cliff Lawrenson, has spent many of his years in the energy business in the US as an investment banker. So we've got a strong US flavour to our board, and that'll continue on. And it's certainly strong vanadium flavour to our board as well. We think, to pat ourselves on the back, that we have one of the strongest vanadium teams in the world for a developing company. Another key aspect of investment, and I'll bring it up early, is that there is the words ESG are mentioned often when it comes to developing in large companies, but sometimes not associated with very small companies. But here in Australia, we have very strong ethical standards through our exchange rules, and increasingly through our OECD requirements for project development. So as such, the approvals for our project and our general operation and license to operate are hinged around our ESG focus. We also have a strong renewable energy strategy. We're building up strong community relationships with First Nations peoples in our region and community associations, and are striving continuously to improve and grow our board capability and adherence to guidelines and other requirements. I'm going to just take a sip of water just then, if it works, and just plunge straight into the project itself. So I've been talking a little bit about vanadium. I've been talking a little bit about where we are and what our market cap is, but why are we so bold and bullish about our project? Well, I've been with the company for over 8 years now. I've been growing the team. I'm a geologist by profession. My focus has been, in those 8 years, has been developing the resource base for this project. Obviously, with any new resource project, the resource itself is absolutely key. And Australia is absolutely blessed by having significant deposits of critical minerals, whether they be rare earths, nickel, cobalt, copper, and in this case, vanadium and lithium, the two biggies we think are changing the world. So where are we? You'll see on the map on the bottom left-hand side, we're sort of central. It's covered by that box, I'm sorry, but we're sort of central Western Australia. It's a pretty remote region, probably population of only less than 100,000, I would say, in that entire map area, if you'd believe that. So very, very sparsely populated, remote region, but with a lot of mining activity that's underway. Each of these areas, towns you see, Mount Magnet, Sandstone, Meekatharra, they're all old gold mining towns, and lots of gold mines around there. We also see in that area is what I call the Vanadium Triangle, which is a number of large titanium, vanadium, magnetite deposits, which are the primary source of vanadium mineralization around the world, in fact. And this area of the crust in which we sit is actually blessed with a number of deposits. So when I joined the company 8 years ago, we started to focus on the geology of our project. We actually called Daniel in. He was working for another company at the time and asked his opinion on our project in terms of the geology. And he said, look, you should push ahead with that. And we did. And over the last 8 years, we've moved the project through a range of different studies, pre-feasibility and definitive feasibility studies to reach our point today to be ready to raise our final capital for delivery of the project. We've done something interesting with the project in that we've split the processing plant and the mine to some degree. Why do we do this? Well, I mentioned the remoteness of the region. It's quite important that this remoteness be negated in some way, and we've done that by putting our major processing hub very close to a gas pipeline, which is in red on the map, and the mine and the concentrator, which will make a primary concentrate, magnetic concentrate, is up where the mining site is. And that gives us an enormous amount of flexibility with staff, with export capability, with import capability for new equipment, and with pricing. It gives us an opportunity to sell a co-product. And it also reduces our environmental impact on the very, very remote and dry region in which we operate at the mine site. So we're very excited by what we've come up with a plan, and we're right in the thick of implementing that particular plan. I mentioned the resources, 239 million tonnes, of which we have a high-grade component of 95 million tonnes. To give a quick breakdown, we mine about 1.6 million tonnes of ore per year from that high grade. So our ore reserve that we've calculated actually sits at around 30 million tonnes, giving us a mine life of just over 25 years at the start. If you subtract 30 from 95, you'll see I've still got quite a lot of high-grade resources available to me to extend that project further beyond the initial estimate. Production rate, I mentioned, around 11,000 tonnes of ETO5. Just for those who are interested in energy, that's around 1 gigawatt hour a year of energy storage in a vanadium redox flow battery system. That's using a 250 megawatt power plant. That would be 4 hours of one battery. And if you'd like to look it up, the Chinese are actually building these batteries right now. We've seen 4 or 5 gigawatt hour batteries being built, vanadium flow batteries being built and commissioned in the last 12 months. The project NPV is modest, not earth-shattering, but it's strong and it's robust, generating around 175 million Australian dollars per year. We think there's a lot of flexibility, and our focus for our development has always been the operating cost. So this operating cost of 443, it's intentionally quoted in US dollars because it's the most important price that we focus our work on. If we can keep that under $5 in our production rate, we're doing very well. Largo Resources, which is a producer listed on the TSX and operating in Brazil, is around the $5 to $5.50 mark, and that's our target. This slide really shows a little bit about the geology for those inquisitive, and I encourage, rather than talking too much about it, I encourage people to look at this presentation either online through our website or look at some of these slides by reviewing this presentation slide by slide. We have a strong magnetic trend on the left. You can see the bright colors against the blue colors. That's the magnetic report. That's the magnetic deposit that hosts the vanadium. You see it's broken up into these blocks, which are ore reserve blocks. And then I've sliced that through vertically on the section on the right-hand side where you can see the layering. That layering is continuous from top to bottom and north to south. And the pink layer at the bottom is where we're actually focusing our economics. That's the highest grade layer and the thickest layer, and gives us the best mine economics along the way. This photograph just shows the mine layout and the mines. It's open cast mine from multiple pits moving from south to north through the course of the life of the project. And you can see we're quite advanced in terms of our design of our wasteland forms and pit designs and roads. And the picture in the background gives you an idea. I mentioned the aridity of the area. So water management here is absolutely key, and our plans to shift a large amount of the water consumption closer to a more water-rich region at the coast is part of our split processing plant model. We've recently completed some drilling, something that resource companies here do a lot of, and we've actually added another 8,000 meters to our project, and that'll allow us to bring a quality of our resource up to measured throughout the entire resource. And that means that we've got strong comfort for our bankers that we have measured resources that will be there when we mine them. This is one of the biggest mistakes and difficulties that resource companies face, is that they will start mining on deposits that they know little about in terms of grade and tons. And we do not want to be in that position. We want to really understand our ore body. It's the critical part of what we're in. It's our asset. We must understand it. So we'll be updating our resource data with some updated drill results in the near future, providing some news flow, followed which will be an updated mineral resource estimate soon to follow after that. Now these may or may not play, so I'm just going to let's just see if they do. No, I don't think I'm going to get any luck here. So just a quick look on this particular slide on the actual ore body extent. You can see the red. Those are those ore blocks I mentioned with the high grade in them. And then over here, you can see that on the left-hand side, those ore blocks placed into the open cuts that we'll be mining. On the bottom right-hand side, just a quick schematic of the actual processing plant. And you can see that on the top on the left, the small one on the top left, and the one down at the coast on the right. These are hard to see on this particular slide. I normally have a video playing. Those are available on our website for playing through. So, as I mentioned, one of the other key things about our project split means that we can mine take our mine and process it at the coast. But that has a very, very significant impact, side effect, if you like, is that in this region, there's over 1 billion tons of qualified resources. Not all of those, I would say, comfortably, are of the same quality as AVLs, but there are many of them that once a processing plant has been built at the hub location, it opens up this field. And this puts Australian Vanadium in a prime position to take advantage of the Vanadium Triangle and work with other companies to extend not only the size and scale of our hub, but also the life of that hub, making it a very, very long life asset for Australia and for Australia's trading partners and future purchases of vanadium, thereby reducing and in fact removing any requirement to use Chinese vanadium or Russian vanadium in the future to maintain the standards at which we use our steel and our other devices that we use vanadium for, including vanadium flow batteries. What is our funding model? Our funding model really is focused on a mix of equity and debt. We've been able to, over the last 8 years, use our shareholder base to fund our project development. We've only recently, in a capital raising with Canaccord last year, in May, we were able to start bringing institutional investors onto our register in a bigger way. We'll continue to do that strategically and then look for opportunities to further place our equity that we need for the project. We did win a modern manufacturing grant from the federal government of Australia for $49 million, and that effectively reports to equity, reducing the equity load on the rest of the investors, effectively giving them a free kick in the way through there. And that is a key differentiator. Again, our project was selected in a critical, in a competitive tender for that project, and part of that was the hub itself and the availability of that processing infrastructure to other companies. The debt side, AVL is well down the track of putting a group of banks together and starting to work through technical due diligence with a group of things. We're working with a company called HCF out of London, and we're working through from obviously the lower cost export finance opportunities through to the more commercial banks and building that up. So there's a lot of watch the space stuff going over the next 5 to 6 months as we close both those debt and equity opportunities. I mentioned these grants. We're very good at getting grants from the Australian government. Australia does not have a formal sector for venture capital, and the Australian government in many ways offers some of that venture capital money in terms of grants or loans at low interest. And AVL has become very good at working its way through those. So where do we want to be? We want to work our way from vanadium mining and processing through to the manufacture of the fuel for the vanadium flow battery, which is vanadium electrolyte. This utilizes our main product and makes the fuel for this long duration energy storage. We'd like also to become very involved with battery assembly and manufacture, an easier task for vanadium flow batteries than it is for lithium-ion batteries, and therefore being very much involved with the downstream side of activities. And for that end, we've had a subsidiary called VSun Energy, focused on Australian deployment for a few years now, and that's growing rapidly and is one of the key differentiators of AVL. We're in fact in the final stages of closing on location and final build with a vanadium electrolyte plant that'll allow us to make vanadium here in Western Australia, around 33 megawatt hours worth of electrolyte to supply the growing market here in Australia that we are currently developing through VSun. This has been partly funded, and we have an agreement with US Vanadium, as I mentioned, for the supply of their high purity vanadium from their Arkansas plant to help us achieve this. So it's very much a partnership with the team at USV to deliver and grow this market, which we all see as the future of vanadium itself. So just in terms of final opportunities, where are we? We've completed the BFS. We are working towards an FID. We'll do that by doing technical due diligence with banks, finalizing offtake, and finalizing our technical work on the study itself. And the engineering. Once we achieve that, we'll execute our engineering contracts and work towards construction. We believe that will be in 23-24. Times are hard in terms of suppliers and contractors, but we will continue to work furiously at that base. As mentioned before, we are well funded to achieve these goals, and that's a critical part of this market right now. We do believe that we will be the world's next primary vanadium producer, and that would be only the fourth primary vanadium producer in the world. The other three being Largo Resources, Glencore, and Bushveld Minerals, those other two in South Africa. I'm going to end it there. Safe to say that we are strong believers in vanadium redox flow batteries, and we believe that this is the key part of the market that investors should pay attention to. Look at what's happening in the US, look at what's happening in Europe, companies that are focused on the vanadium redox flow battery. It is really going to be a key to the energy transition, and that vanadium investors should look for opportunities both locally and further afield to see where this vanadium is going to come from. And AVL is certainly something that US investors now have access to through OTC and on the ASX directly. So please keep in touch. As John mentioned earlier in the introduction, please can you put any questions or post any questions up for us, and I'll make an appointment to catch up with you